Let's look into BTC USDD. The structure of BTC USDD is well structured, and the calibration is quite on point and precise. What does this mean when I say calibration? Every buy and sell is already pre-known. Every buy and sell opportunity for BTC is already known by BTC market makers. And it's important to know where the market makers hide. They are the major guys that move the market. They move the market because of liquidity. It's not because they just want to move it. They move it based on the corporate interest. So the upswing of a BTC is halted, and I like to look at the structure on daily to point out what really happened and why you didn't have a breach above 74,000 level. Price tapped into 74,000 level and didn't make, 73,618 level and didn't make past that level. We'll look at it on the daily time frame to, you know, bring out what really happened. So we'll look at the price action from December 2023 and pick it up from there. Here we have a resistance structure by way of RS. RS means resistance becomes support on break of structure. Then we'll have another RS level. The two highs, high market made higher high, higher low, higher high, higher low, higher high. The two highs followed by a break of structure makes an ascending trend line. The reason is because I want to see. Now we connect a two highs. Let's assuming we didn't have this. We have a two highs, the two heads. Let's say this is a human head, this is a human head, and we put a ladder or we put a plank on the two heads, and there is a bridge on these two. Then we will wait for the retest. So on these two highs, where we have an ascending trend line, this candle came and broke the structure. This is a candle that broke the structure on Wednesday, February 2024. This is the candle that broke the structure. So I like to also note that day to be very specific. Evidence is everything. So now we have a break of structure. What structure was broken? A resistance structure. What structure again? You call it supply roof. So I like to call it supply roof because at a point every time price comes in, is sold off. So our supply roof has been broken on daily. So having that in mind, now let's pick it up from there. Then price now on break of this structure now, whenever a roof is broken, what happens? It becomes a demand floor. So on that note, we now return to demand floor. Keeping trade more on a buy bias. So what that means is that if you're thinking anything sell now, change your mind. That market has changed from selling to buying. Now, when market broke the structure, it's the presence of liquidity that broke a supply roof. Now, meaning that there is more demand. Market is in the hands of the bulls. So when price return here, on based on break and retest, like we have here ROS. ROS means resistance structure, resistance structure. Break of a resistance structure becomes the support structure. So price broke the structure, turned down to become SR. Support become resistance. What it means is that if price breaks this line, it becomes a resistance structure. So this line becomes our ascending a psychological ascending trend line. Psychological ascending trend line. Let's know the angle, or let's leave it for now. So what we'll look is in the future, if price returns here, it will be a buy based on change in bias from supply roof to demand floor. So the demand floor bias still hold. And you will see on critical notes that when price return to the ascending trend line, it end up in a buy, SR. Now, what are we looking for? Invalidation of trend. Invalidation of trend is when trend will shift from SR to ROS. If you shift from SR to ROS, it becomes a supply roof. Now, when price came here, it broke this structure. It broke this structure. What structure was broken? Support structure. Switching price from demand to supply, and immediately start selling. On touch of the roof, sell. Touch of the roof, sell. Touch of the roof, sell. And you can see a heavy bearish impulse. Price drops significantly to come and meet another demand floor. The only reason a falling knife will stop is when it meets a strong demand. That is the only reason a falling knife will ever stop. If a falling knife doesn't meet a strong demand, it is never going to stop. So this is why we pick these points the way they reflect. We pick them the way they reflect. So we pick them the way they reflect because these are all falling knife, heavy falling knife. If you catch this in your account balance, it could be empty. It could go empty. If this catches you, you're going empty. Your account will be in zero. Yes. So it's well calibrated. It is well calibrated. So the market makers already know where these things will fall. and who it will break his head. They already know. So this is what it does. So you see that falling knife was stopped by this support structure acting as a dynamic support. So it's another demand floor, a descending demand floor. You can see it's descending, but for every time price touches the floor, it ends up in a buy. So I said the market is well calibrated once again. So everything you see that happens in the market is well calibrated. Now we picked the body of the daily candle. How about the wicks? How about the dangerous wicks? Some of those wicks are capable of hunting your stop loss. The wicks are used to take stop loss. And at the end of the day, you see that the reaction was in line with your analysis, but you failed because the wicks, you didn't put your stop loss to, to accommodate them. So now we have this, we clone, we pick the body of the candle as the way they react. Then we take our trend line to the wicks. That is where you wait. You wait on the line of the wicks for your buy. You can't ignore it. So you are not sure that market will reject by at the end of the day, you seeing the body of the candle close above the line. Then how about the wicks? How about the wicks? So every analysis on BTC, you must accommodate the wicks. The wicks, your account cannot stand it. If you're on a one lot size and you have a 70 pip loss, your account is almost going drain. Your account will almost look drained. So the strategy is to accommodate BTC wicks. We accommodate it, and price will do everything within its reach to make sure that it pierces and takes your liquidity through these rejection candles. They are very dangerous. They are the hands of the big boys. Every week, long week you see reject on daily are hands of the big boys. They are hands of the institution. The deep hand, take your stop loss and go. They already know. They already know you are playing into structure. They know that you know this kind of thing. But the advantage they have is the advantage to hunt your stop loss and take away that stop loss. And they also want you to see at the end of the day you are right, but they are bigger than you. So that's what they want to do at the end of the day. They know you are right, but they just want to tell you that they know what you know. So you are the one who don't know that they know. So this is what they do. Deep hand into your stop loss, take it, then go. Deep hand, look at it here. Look at the body of the candle close, or the deep hand here. So most stop loss within this area is taken out. At the end of the day, you are here for a buy. Market takes you out. So that is why it's good to focus on the structure of the market so that we can see the price action the way they happen on daily. And you can see it here. If you are with this guy here, nobody will deep hand into your stop loss because what? We are on break and retest. Price broke what? A resistance structure. A break of a supply rule becomes a demand floor. So on demand floor, price came back to demand to give us that bullish impulse, right? And price came again, broke the demand structure, which is a support structure. On break it, we return what? To supply, sell, RT. This becomes SR. This becomes an RS. Resistance becomes support on break of structure. So we're looking at price for price to return back. If price returns back, we set seal for buying. On its way down falling, a falling knife, it met its colleagues, a descending trend line, which I will call DTL. So these are descending trend lines. These are descending trend lines where we have a bullish price action every time price touches it. Every time, every time, every time, every single time. So now price came here, met others like you have one, two, three. So it cannot be different. Now, upswing, that impulse, the liquidity peak at this level broke the structure, broke the resistance structure to return price on demand. So we move one small again to demand floor, which is a switch from supply roof to demand floor. Here now becomes a demand floor. If on critical observation, every price action at this level is a buy on return to the level. One line, one decision. One line, two decision. Now you see, so if it's trading above the line, it's on demand. Trading below the line, it's on supply. So when price return here, what happened? It has bought. Return again, buy. Then picked what? Liquidity from the roof, where we have a supply roof. On the supply roof, we have aggressive sell behavior. That aggressive sell behavior have a lineup with a tradition of three touches. Touch one, touch two, touch three, forming a descending trend line. On technical, when price return, it must pick liquidity from the roof. And when it gets to the roof, selling roof, what happened? Price sells down. So we'll continue to look at it. Why the roof is important is we want to see when there's a breakout from a roof. A breakout from the roof will call for a retest, especially when market is building its consolidation in a descending channel. This market is consolidating, whether you like it or not. It's consolidating on a descending channel. The impulse leg failed, stopped here. The impulse leg stopped here, then start to consolidate. So it's good to see. Look at the impulse leg. This is the heavy impulse leg, and we go into consolidation in a descending manner. So if you are finding any trade within the consolidation, what you'll be looking out for is where will price break out from, especially the body of the candle. We are more concerned about daily body candle break and close. That is what we want to see at the end of the day. The body of the candle, did it break out from the channel? If it breaks out from the channel, then you want to see if it will come back to the test, or you just have a daily fake out. And even if you think it's a fake out, under structure, you will see it. So now we are now consolidating on a descending channel. The market is deciding between buyers and sellers. Buyers. So what happens when market is consolidating? We have three phases in the market. If it's not uptrending, it's downtrending or consolidating. Now the uptrend is paused and market is now consolidating. But in a descending channel, most consolidation, people think consolidation has to be rectangular. No, we can have ascending, descending, or horizontal consolidation. So when market go into consolidation phase, then you build a roof and a floor. So we have here a roof. We have here as a floor. So what happens is that when we come to the demand floor, our bias is technically a buy. Our bias for every time you come to the floor is technically a buy. So for every time you see price makes its way to the demand floor, we trigger ourselves on the buy side, hoping that we'll have a major breakout. And when we have a major breakout, especially the body candle of daily candle, look at all the bodies here. Look at all the body. One. So we're going to put the daily candle critical red line. We don't want the daily candle to cross this. The daily candle. We don't want any of them to cross this line. If you cross this line, we are triggered. So we have the black line. The black line is a critical line for all the daily candle. If any body of a daily candle closes above this, below this line, close below this line is a trigger, meaning that we are changing our bias from that usual buying we are buying to see if we can continue selling because price is falling from the roof where it picks impulse. So you see impulse, correction, impulse, correction, impulse, correction. Let's put it this way. You can see, okay, impulse, correction, impulse, correction, impulse, correction. It must touch the floor. Anytime it gets to the roof, it must touch the floor. You see, impulse, correction. Now we have December of October 14th. The daily candle broke out of the descending channel. The market is consolidating. It broke out from it. And I said, whenever price breaks out from a consolidation, whichever direction, either from the roof or from the floor, you wait for a test and continue. In the direction of what? The trend. What trend are we continuing? In upward. The trend is heavily bullish. Yes, overextended. That is not the issue. You had a extensive period of consolidation, giving the market ample time to decide who wins the battle, who has more liquidity, who controls the market. We have several ETFs now, and that means BlackRock, Vanguard, Three Arrow Capital, Fidelity Investment. These are big equity firms have stepped foot into this game. So what it means is that they have more holding. So people like MicroStrategy, who are big in acquisition, if they are not ready offloading, you can't see price dipping unnecessarily. So price will continue in uptrend after few consolidation. Consolidation is a period of negotiation. At the end of it, who wins the discussion continues in the larger trend, and the larger trend is bullish. So this candle, I've deliberated on this candle before in my previous video earlier this month. Why this candle came here? It was a final dip into stop loss, and I know why this happened. I picked it in my last post, and if you also look here, we're looking at for another support structure. So if you look here, you'll see that price also created in the month of December. We have a floor from here. Here we have a roof. So this price action is got from our floor. It's got from our floor, which I will want to point out and keep it in mind, and believing that in the future price will return here to deep hand again. Look at it. You can see the support structure. In 2023 December, we have a roof and a floor. So here is my demand floor. So I'll keep here my demand floor intact so that my mind will stay glued. In the future, I want price to return here to dip hand again into stop loss. So be very careful, watch this structure, go practice it, hold it, and stay guided. You can see this is our demand floor, this is our supply roof. So that dip came from price, putting hand into stop loss. Take it and go. It's not manipulation like a lot of people will say. No, 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 no. There's no manipulation in the market. Everything is well calibrated. Everything is 100% well calibrated. It is called calibration. So I will introduce that word in my strategy, calibration, so that a lot of people will know that there's something like manipulation in the financial market. Every price action is well calibrated by market makers. They are guys that own the market. They control the market. They hold the liquidity. And in this space, I will tell you, BlackRock have hand inside, Vanguard have hand inside, Fidelity Investment have hand inside, Three Arrow Capital have hand inside. So these are people who literally drive market. You can't you can't toil when they are doing things. You just look and find out what they are doing. So you see, in the next return, to be on a critical note, I feel that now we have here from the roof, which we were explaining, after price formed a double top structure. You see the M structure, break of a neckline, price retest, and sold off massively. Now, if we look at this price action and what gold did close of Friday yesterday, close of the month, we can begin to see some similarities. Are market makers willing to take profit at this level again? When we look at what price has done here, we want to be very, very analytical and pay critical attention to see what price have done in the past. There's a take profit at this level. After the break of the neckline, price has taken a significant drop from 65,000 to where you see 48K. They dipped hand and took this profit out before they commenced buying. Now price returned to the same level where market makers took hand. They collected almost, they look at the difference, 65K to 40, 49 to 48. Yes, right? Yeah, to 49, 49 to 65. That's almost a 6,000 P of the market. They put 6,000 points away from the market. Now they return to the same point. Is there a probability that market makers also want to take profit again? There is a possibility. Look at what they have done because the market is well calibrated. Look at what they have done here. After the break of structure, look at the break of structure, price return on demand, buy, buy, buy. Break of structure, sell. Break of structure, buy, buy, buy. Formed a double top, a bearish price action, and price dropped significantly from 65,000 to 48K, right? Now they return to the same level. Will they do the same thing again? There is a probability. And when you look at it, we have double confluence. What double confluence do we have? Showing that this major rejection here will go a long way, becoming a very dangerous price action. But we'll look at it if there's anything that will hamper this movement. You look here from the top where we have a previous all-time high. Market create a break of structure. Look at the roof, a break of a support structure. Price came on retest 1, retest 2. So all these are all retest candles, RT. These are all retest candles. These are all retest candles, RT. So price has retested 1, 2, 3, 4, and came back the last time 5. This is the 5th time. This structure is weak on technical. I expect if price comes here next time, you should be able to break here. A break above this structure will be a further upswing, introducing the market into 80 something K. We're also going to pick at that price action as to see how price could get to 80 something K if price manages to break this roof. So this becomes a pending resistance structure or pending supply roof. This supply roof is critical. If this supply roof is not broken, upswing will be impossible because market is calibrated. So you must put it in mind. You must put it in mind. The market is well calibrated. So we see now on the midterm, we have another structure which is also pending the market. I change the color to blue. You can see the blue line. We have here a resistance structure. Price came down, respected the resistance structure. Break of resistance structure, price return on demand, buy 1, buy 2. Break of your support structure, price started selling. Return. Return twice, formed a double top and sold off. And when price returned here again, price respected this structure. This blue structure becomes a very strong structure, which I call another supply roof. That's another supply roof, another pending supply roof. Look at the price action. After this breakout from the support structure, price came retest 1, retest 2, retest 3. In the previous, it placed support structure, demand, demand. supply. So here it played the demand role. So we bring here what?